Day 5. Stock exchanges, NYSE, NASDAQ, and global markets. Welcome to FBS, Growth School, where we decode the mysteries of finance and investing. In today's session, we'll explore the heartbeat of the global economy, stock exchanges. We'll uncover how major exchanges like the NYSE and NASDAQ function, their significance, and how global markets interplay to drive the world of finance. Let's dive right in.
What are stock exchanges? A stock exchange is a centralized marketplace where securities like stocks, bonds, and other financial instruments are bought and sold. It acts as a meeting point for buyers and sellers, ensuring transparency, liquidity, and efficiency. Think of a stock exchange as the engine of the financial market. Without it, trading would be chaotic, inefficient, and opaque. Stock exchanges provide a structured environment with rules, regulations, and technology to facilitate smooth transactions. Major stock exchanges in the United States. 1. The New York Stock Exchange, NYSE. The NYSE, located on Wall Street in New York City, is the largest and most prestigious stock exchange in the world. Here's what makes it iconic.
History and legacy. Established in 1792, the NYSE has played a pivotal role in shaping modern finance. Its trading floor, with brokers yelling and waving orders, became an enduring symbol of capitalism. How it operates. The NYSE uses an auction-based trading system where buyers and sellers bid against each other. Human specialists complement electronic trading, ensuring efficient price discovery and minimizing volatility. Significance. With over 2,000 listed companies, the NYSE boasts household names like Apple, Coca-Cola, and Walmart. It's where blue-chip companies and established corporations often choose to list. Market cap and global influence. The NYSE has a market capitalization exceeding $30 trillion, making it a global financial powerhouse. Its performance influences markets worldwide.
NASDAQ. While the NYSE represents tradition, the NASDAQ is the face of innovation. Founded in 1971, it was the world's first electronic stock market.
Technology-driven. Unlike the NYSE, the NASDAQ operates entirely electronically, using automated systems to match buyers and sellers. This efficiency appeals to technology-focused companies.
Listing giants. The NASDAQ is home to tech behemoths like Microsoft, Amazon, Google, and Tesla. If you think of cutting-edge innovation, think of NASDAQ.
Market characteristics. The NASDAQ is known for its growth-oriented companies. Stocks listed here tend to be more volatile but offer higher growth potential.
Market tiers. The NASDAQ operates across 3 tiers: NASDAQ Global Select Market, NASDAQ Global Market, and NASDAQ Capital Market. These tiers reflect a company's size, liquidity, and compliance.
NYSE versus NASDAQ. While both the NYSE and NASDAQ are US-based exchanges, their differences are significant. Trading style. NYSE uses a hybrid system, human and electronic, while NASDAQ is fully automated. Focus. NYSE attracts established, large-cap companies. NASDAQ is a haven for tech and growth stocks. Volatility. NASDAQ stocks are typically more volatile than NYSE-listed stocks.
Global stock exchanges. The stock market isn't limited to the US. Many global exchanges play critical roles in their respective economies. Let's explore the major players. London Stock Exchange, LSE, one of the oldest exchanges, founded in 1801. It lists over 2,000 companies from more than 60 countries, making it one of the most international exchanges. The FTSE 100 index tracks the top 100 companies on the LSE and serves as a barometer for the UK's economic health. Tokyo Stock Exchange, TSE, the largest stock exchange in Asia, located in Japan, home to iconic companies like Toyota, Sony, and Mitsubishi. The Nikkei 225 index is its benchmark index, often reflecting the state of the Japanese economy. Shanghai Stock Exchange, SSE, one of China's 2 major exchanges alongside the Shenzhen Stock Exchange, focuses on domestic companies, although international interest in Chinese markets is growing. Its performance is heavily influenced by China's economic policies. Euronext, a pan-European exchange with operations in Amsterdam, Paris, Dublin, and Lisbon, offers a unified platform for trading European securities. Other notable exchanges: Hong Kong Stock Exchange, HKEX, a gateway between Chinese and international markets. Bombay Stock Exchange, BSE, India's oldest stock exchange, known for its benchmark Sensex index. Toronto Stock Exchange, TSX, Canada's leading exchange, emphasizing mining and energy sectors. How global markets are interconnected. The globalization of finance has interconnected stock markets worldwide. Here's how they influence each other. Economic interdependence. Events in one market often ripple across others. For example, a downturn in the US markets may trigger sell-offs in Europe and Asia. Currencies and commodities. Global markets are influenced by fluctuations in currencies and commodities like oil and gold. 24/7. Trading. While each exchange has specific trading hours, global markets operate almost continuously. For example, when US markets close, Asian markets open. After Asia, Europe takes over. ETFs and International Investments Exchange Traded Funds, ETFs, allow investors to gain exposure to international markets without trading directly on foreign exchanges.
Why stock exchanges matter. Stock exchanges are the backbone of capital markets. Their significance includes capital formation. They provide companies with the means to raise funds for expansion. Wealth generation. They offer individuals opportunities to grow wealth through investing. Economic health indicators. Stock market performance often reflects the overall health of an economy. Liquidity and transparency. Exchanges ensure that investors can buy or sell assets quickly and with full knowledge of market conditions. Challenges and the future of stock exchanges. While stock exchanges have transformed global finance, they face challenges. Regulatory issues. Ensuring fair practices and preventing fraud remains a constant concern. Technological disruption, blockchain and decentralized finance, DeFi, could challenge traditional exchange models. Geopolitical risks, trade wars, sanctions and political instability can disrupt markets. The future of stock exchanges lies in their ability to adapt to these challenges while continuing to drive global economic growth. Conclusion. The NYSE, NASDAQ, and global stock exchanges form the foundation of modern financial markets. They provide a platform for innovation, wealth creation, and economic growth. Understanding their workings not only empowers you as an investor, but also helps you appreciate their role in shaping the world. If you found today's session insightful, like this video, share your thoughts in the comments, and subscribe to FBS Growth School for more. Tomorrow, we'll dive into understanding stock market indices, like the S&P 500, Dow Jones, and FTSE 100. Stay tuned for more powerful lessons. See you in the next video.